everyone, today is Friday, November 27th, 2020. My name is Evan. Welcome back to our weekly stock market analysis video. Hope everyone out there had a wonderful Thanksgiving holiday. If you're new to these videos, welcome. We break them up into two parts. In our first part, we're going to go through everything that happened this week in markets. We're going to look at performance sectors, internals, volatility, and really sort of point out everything that stands out. And then in part two, we're going to jump into the charts, put everything into context, and try and position ourselves in the best possible way looking ahead to the next week. So hopefully that sounds good to you. Let's dive into some of the takeaways from this week. Stocks continuing to move higher. That's the theme we're seeing. The bulls are continuing to just extend the rally here into the end of the year, into the month end of November. The dollar continues to fall and metals continue to break down. So those themes are not new. They've been happening and they are basically persisting and continuing. So if we look here at performance this week, it was very, very strong across the board. Everything up 2 to 3%. Russell 2000 up almost 4%. Look at the Russell 2000 1-month returns now, 18.81%. That's very, very impressive. Sharp move there for small cap stocks, but everything did fare quite well here this week. If we look at market internals, I get a little lazy on this slide. So Thursday was holiday. Thanksgiving holiday, so these numbers basically just continue to back them out. So technically, today's value, Wednesday's value, Tuesday's value, Monday's value, and then these would be last Friday's values. All basically, though, you can see it was constructive and positive here throughout the week. 783 highs. Again, that's not the week value. That's this week plus last Friday, but still a very good, strong showing there for the number of stocks hitting 52-week highs minus the lows. AD line is strong, 2,900. And then if we look at the percentage of stocks above a 20-period simple moving average, we're still up around 82%. So most stocks in an uptrend here participating in this rally. If we look at the sort of back 30 days or the last 30 days of stocks, 52-week highs minus the lows for the NYSE. You can see that nice trend to the upside here just continues to pick up here and trend to the upper right. That is very healthy for markets. That suggests, things are working. And that the current is behind this upswing in the market. Doesn't speak to any of the near-term volatility that we could experience, but things look pretty good here when we look at this view of market internals. If we go to sector performance, you can see again a very positive week here. Energy back at the top of the list, 8.66% this week. It's up 36% over the past 1 month. Quite incredible. Still, though, if you look at the next column, 1-year return, 27% down. So this goes to show you just how beaten up and effectively hated energy had been, and over the last 1 year, you can say still is, because it is the worst performing sector still over the past 1 year, despite a 36% rally over the past month. So number 2 spot was financials, up 5%. Very similar tone here, up 20%, massive amount for 1 month in financials. In the past 1 year, they're still negative. Consumer discretionary is the 3rd slot there at plus 2.95%. Underperformers this week, real estate, only thing in the red. Utilities just slightly above green, and healthcare slightly in the green there as well. If we go to volatility, continues to unwind here. It's the lowest closing VIX we've seen since March, since kind of the height of the coronavirus, or the height of the meltdown there in terms of market reaction to coronavirus. This is the lowest VIX, I believe, since that period, 20.88, almost a teenager again. Will it happen? We'll have to see next week. If this continues in this recent trend here, volatility continuing to unwind, then maybe we'll be back under a 20 VIX, and that would be quite remarkable. Seeing that for, it's been such a long time. So volatility term structure looking pretty good here in terms of the way we're pricing it going out into the future. If we look at interest rates and credit, you can see yields were sort of mixed this week, but mostly higher. 5-year was down. Investment grade bonds up, high yield bonds up. Not too much else to add to this slide. Dollar and commodities here. Dollar continues to fall. Gold and silver continue to fall as well. So sometimes Those things are pretty tightly correlated, dollar down, gold up type of deal, but we're not seeing that. We're seeing metals unwind there. We are seeing agriculture, so DBA ETF there continues to work. Crude oil continues to work. Natural gas rebounding a bit. So they're liking the lower dollar, but gold and silver still not having it. So if we put everything together here, it's another solid report card. I think it's the same thing we had last week. It's an A-. Basically got check marks pretty much across the board. Our volatility check mark is still missing because of where VIX is in terms of where it usually is. So we'll still get an A- there instead of the solid A. All around a pretty strong showing though. If we finalize here with our positioning, so remember we got Merlin in the top, so this row here, our newest trading strategy, Lamerick, on the bottom. Both of these strategies now are long in the market, none of them aggressively long. So you can see Merlin's about 58% invested right now. It's been having a really strong month. In fact, it's going to be one of the strongest months going back over 2 years for Merlin. So I'm really excited to see that, happy to see that. It's been taking profits basically in this rally for the most part. Hasn't really been adding a whole lot of new exposure, but it's been, kind of riding out what it has been in. And you can see, it's just been slowly kind of lowering that exposure into this rally. Lamerick here has been short, has been long. Overall, it's been pretty neutral, though. It's been dancing around kind of the flat line. It is currently a little bit invested here over 6 positions. Does have a couple of shorts on, a couple of longs on, but that's the way we're looking heading into next week. As a reminder, this is kind of the last several days here, a couple of days of our Black Friday sale. And if you want either of these strategies to start trading your own, getting reports and signals, check out, just head to the Trade Risk. You'll see the Black Friday sales. You can jump on either of these for some pretty steep discounts. They are going to go back up to full price after this weekend, and we will not be offering discounts until maybe next year around this time. So that's our positioning here. So hopefully that makes sense, and we'll be back in just a moment with part 2. Okay, we're back here. We got part 2 going on with TC2000 open. This is our equity market grid. Price itself, the white dashed lines you see on all these charts. The colored dots are a custom smart trend filter indicator that we've developed. Measures price, volume, and helps us determine trend and trend strength. You can learn more about that in a link appearing in the top right hand of your screen. So if we look here at the weekly time frame, everything here still printing bullish signals. That's nothing new. We've had basically a buy signal on markets now for months, and that continues to be the same case. If we go down to the daily chart, it's very much the same thing here. You can see just how elevated and extended some of this the front last white dashed line is from its trend filter. So that does suggest that, yes, we are quite extended here in the short term, but we know that the long-term trend supports this market to the upside, shorter-term trend supports this market to the upside, and we should basically expect that markets are going to be overbought in this type of alignment, in this type of environment. So let's go down into the price action here and look a little bit closer at what's been going on. Basically, the S&P 500 lifted up last Tuesday, or this Tuesday of this week. Remember, it was a short week, so we only had 4-day trading week. But basically, we sort of have been, mapping and measuring on these horizontal lines that you've seen here. When we pulled back under 35.80, that was the level to sort of see the market get back above for momentum to help strengthen the bull case, and that occurred pretty sharply here on Tuesday of this week. We got that strong push to the upside. We've got well, I don't really want to call it, it's very mild follow through, but basically just held in there for the rest of the week, and we closed at new closing all-time highs. So we're at all-time closing highs. We have uptrends on multiple time frames. We're breaking above all recent price structure. This is a bullish environment, a bullish sort of disposition. We are extended a bit in the short term, not so much in the S&P 500, but in other areas of the market. In fact, the S&P 500 does look, like it could certainly push here. Almost like, if you really want to be optimistic, this was your measured move higher here of about 12%. You went sideways for 2 weeks. If this is really going to, extend itself for another 12%, then, you could be looking at targets, much closer to 4,000 into this sort of next leg. Not saying that has to happen, not saying it will happen, just saying it's certainly a probabilistic event here if the bulls are going to continue to really slam this market to the upside. If we start losing 35.80, if we start losing 35.40, 35.30 down in here, if we start breaking down, rolling over, then all bets are off. Then we want to be paying attention and mitigating risk and managing risk, and that changes our outlook. But for now, the weight of the evidence here supports the bull case. We should continue to respect it. You could argue, actually, we're kind of still dancing underneath these all-time highs that we set on the 9th. So, that's around 36.45. We closed at 36.38. So that's kind of our single level above where we currently are. And we'll see, how that gets followed up next week. So that's the S&P 500. This is the Russell 2000. This continues to push and expand here to the upside. It's seeing one of its strongest months, strongest, performance periods that over the past couple of weeks of history. And so if we look at this long-term trend, it's still, or I guess medium-term trend, short-term trend, however you think of 1 month, you can see it's still pretty steep in here, but price is still just holding on up right in here, kind of riding this as its slope higher. So if you're tactical, if you're looking for if you're riding this trend and you want to really protect profits tightly, then you can be looking at this slope here and saying if it starts to lose this, if it starts to break down there, then that's, an exit point, or you're going to sell some, or you're going to lock in some gains. And that's one way you could sort of measure it. We're always a fan of horizontal levels as much as possible. You can see these levels in here, the tight range that developed last week. I'd say, if we start losing 176 or so, then the character changes a bit for the Russell 2000. But until and if that happens, the trend continues to be up. We are extended here in the short term. It's a very, very tough chase right now, putting on new long exposure, but it is what's working right now. Markets are at all-time highs, and you're seeing that play out here in the Russell 2000. Now, if we go to the Nasdaq 100, you can see here also the last, basically, to start breaking out is the Nasdaq 100. We had this very tight compression going on here last week. We talked about that. We got the expansion higher on Tuesday, so we got our breakout in motion. We got follow through on Wednesday. We got more follow through here on Friday, and we are now closing above the November pivot and the October pivot. That is bullish. That is constructive. We're not quite back at all-time high. So if you recall, that's back in early September. So we still got this level up here around 303 for the Qs. But all in all, this looks pretty good here for the Nasdaq 100. If we go to a weekly chart specifically, and we try and clean this up a little bit, you can see here that this looks increasingly constructive here, especially when you think of this as the big expansion bar. It spent 2 weeks going sideways, got everybody to worry about its underperformance, and rightfully so. But that breakout never happened. It never rolled over. It hasn't really been stuck in the mud. It's now starting to move higher here, and this is a new all-time weekly closing high for the Nasdaq 100. So once again, pretty constructive action. It's actually really tough to find bearish evidence right now, and some will say that's a signal in itself. So maybe things are a little too frothy. Maybe everything looks a little too good right now. The VIX closing at its lows, all the markets starting to work. This is where, maybe the rug can get pulled, or some volatility can come in. Again, that's a fine mindset to have, as long as you're managing risk and you're doing it responsibly. But for now, it's paying to be long, and that's where we want to be. So that is the roundup there on basically what markets are looking like. Let's just actually take a quick peek here at the VIX because we mentioned it. See here closing around 20.84. I don't know if that's the final value yet, but that would be, again, if we go back all the way over here and look left, it's going to be the lowest level since basically February 21st. So it's basically been it's been a long time. It's been almost an entire year where we've seen a VIX over 20. We're still over 20. We briefly, I guess, got down to 19 and change here intraday. So it'll be interesting to see how that continues next week if we can get back into the teens on a closing basis. So that's the equity markets all covered up pretty neatly there. If we go to some of the other markets here, you can see VIX, volatility, and a sell signal. TLT trying to scrap together and trying to revive this this recent strength here on a very short-term chart. You can see it's neutral with our trend filter, but it did produce a buy signal on Monday, so we usually give the benefit of the doubt to the prior signal that has been produced. So maybe some evidence here that TLT could finally start to turn around. Longer term, TLT still in a bearish trend, so there's no change there. You have basically this counter, kind of a counter trend move here in the short term versus the longer term. If we go to commodities next, we take a look at gold. Gold had a pretty bad week. It was down 4.5%. Last week, we produced a sell signal here on gold on the weekly chart, on the long-term trend. So our smart trend filter kind of jumped in there and said, now's the time where we should expect prices to go lower. They certainly accelerated lower this week, so it was a good timely call. On the daily chart, though, this hasn't been new news because basically we've been in almost nothing but sell and neutral signals here throughout the last 4 months. There's been a couple of pockets of some brief buying opportunities that basically got you whipsawed or not really enjoying any actual upside move. But except for those 2 days, it's been mostly consistently lower here, and you're just essentially getting trend alignment now, short term and longer term on gold. Obviously, gold pretty extended here to the downside. Could see some type of pop here, 1%, 2%, 3%, but overall the trend is lower. Same thing for silver. You can see on the daily chart, sell signal. Weekly chart hasn't quite rolled over yet. So silver had a really bad week this week, down 6.4%, but you can see longer term, it's still trying to hang on to this neutral reading here. So, it's going to have to really get back, bounce back sharply next week to save this from rolling over and going into sell mode. Hasn't quite happened just yet. USO here, oil, good week here for oil, 6% up and producing a buy signal there on the weekly chart. Daily chart's been up now for the past 2 weeks. So that's kind of the same story there for oil. Now let's go right to some of the individual sectors. We'll finish there a little bit shorter this week just because because of the shorter week and quieter trading. We talked about the Q's weekly chart. I wanted to point out, I wanted to talk about just 2 sectors here, basically XLU, which is kind of the standout weakest looking sector now. Basically everything's working. Utilities looks a little sluggish though. So basically when we look here at XLU, it's been, it's off of its highs that it saw a couple weeks ago. Weekly chart's still up and it is still holding above $61. So that's a good relevant level to use. Essentially October lows, but this has been stagnating a little bit. It doesn't have to roll over, just might be a sideways trend here for more time. But utilities kind of looks like the weakest or less interesting out of the bunch. If we go to IBB, I want to come back to this because IBB saw a sharp move here on Friday, 3% to the upside. Nice breakout, kind of expansion move. Wasn't a lot of volume because it's the day after Thanksgiving and it's a half day. So not a whole lot behind the move. But if we look at the weekly chart, this is looking pretty primed here again. And if you can get some follow through over, the 143, 144 area, this is going to look pretty nice here. If you go to XBI, which is more just like a equal weighted biotech ETF, this broke out to new highs today. So you can see this one's been working much, kind of stronger here to the upside. We actually hit our second target in this today. So we were in LABU, which is a 3X ETF for basically XBI, but biotech. This was in our Merlin trading strategy. So we hit our second target today. We were out of this trade, out of this position. We've been in it for a while. We actually bought LABU on this day right in here around $44. We sold the rest today. I think just before it hit 80. I think it was an 80% gain on this trade. We held it for about 3 months. So no longer have the position. We have a lot of individual stocks in biotech specifically, but no longer holding this leveraged ETF. Sold out of it today, and it was a real nice trade for us, and wish they all worked exactly like that. But that said, XBI and Biotech, IBB, both looking real strong there, and IBB specifically pretty actionable given the fact it's gone sideways for so long. So that's it. That's what I got for the short week. Thanks as always for tuning in and watching. Hopefully you had a good holiday away from markets and get to enjoy some time with friends and family. Remember, if you are interested in picking up any of our tools, services, scans, indicators, watch lists, systems, everything is on sale for the next 2 days. So check it out before that sale goes away. And as always, thanks so much for tuning in. We'll see you back here next week. Have a great weekend.